All right, here we go. Hey, everybody. It's Renee. We are going to wait for people to join in. I'll give it a couple minutes. Hey, Raquel. How are you on Instagram land? And Kevin, hey, how you guys doing? So I have Liz here with me today. I'm waiting for people from Facebook to chime in. I always feel like Facebook looks crazy. Hey, Eric, how are you? Hey, Alvin. Thanks for joining, guys. We'll give everyone a moment to log in. How was you all's weekend? Anything fun, exciting? I'm doing great, Kevin. Thank you for asking. So you guys know our broadcast from Facebook and Instagram. Who is that? Sikamo Bar? Thanks for joining. Hey, Wanda. Thanks for joining, guys. So I had a pretty good weekend. Nothing major going on over here. Just trying to get ready for you guys. Blackpink, yes. Black Panther was the bomb. I think everybody wants to live in Wakanda now, like, right?
Group trip to Wakanda.
We're like, how can we get to Wakanda? I know. I was like, oh, yeah, Wakanda's great. Let's go there. Let's live there. I was, you need to shelter your income from your home-based business. Awesome. Well, we got Liz here today, so we're going to get started in a little bit. We'll be talking about that.
Oh, dear.
I was on, I think it was a Facebook group, and they were talking about, somebody posted, they said, group trip to Wakanda, July 10th through the 18th, who's in? And a couple people were like, oh, yeah, send me the information. How much is it? And I was like, y'all do know that Wakanda is not a real place, right? But anyway, I guess they learned today. So, hey, Mike, thanks for joining. Hey, Rocky, can you do me a favor? Can you text Oyenda and ask her to join in for me, please? What?
I said hook a brother.
Yes, he said hook a brother up. We're gonna hook you up today. We got y'all. Hey, Liz, thanks for joining our little late night business party. Date night with Renee. All right, so I'm gonna keep you guys entertained while we wait for a couple people to join in. So I think last week when I first announced the topic, I said live with Renee, and I named it Who's Iris a while ago. Hopefully I get the joke right. So if you guys have heard the joke before and I screw it up really badly, like, don't call me out, okay? But I'm gonna try to get this right. Hey, Chuck, thanks for joining. So the joke went like this. A grandmother comes over to visit her daughter and her granddaughter. And when she arrives, the granddaughter said, mommy's not in a good mood right now. You might want to, wait a little bit. It seems like every time Iris calls, mommy is upset. And she's called every day this week. So mommy's in a bad mood right now. So the grandmother is like, well, who's this person, Iris, that keeps calling my daughter? And she goes in her daughter's room and she's like, who's Iris? And why is she calling you every day, upsetting you? And the daughter looked startled and was like, Iris? I don't know an Iris. And the daughter says, the grandmother says, your daughter just told me that Iris has been calling you every day this week, upsetting you. So the mom starts hysterically laughing and she's like, no, Mom, it's not Iris, it's the IRS. So I thought it was kind of funny. I'm not a joke teller, so hopefully you guys laugh, but I thought it was funny to me. Liz kind of giggled, so. But I just want to remind you guys, even though I told that joke about the IRS calling, the IRS is not going to call you. They'll send you a letter, and if you guys schedule some type of phone call, you will call them or they will call you, but they're not going to just call you out the blue.
Right. Yeah, that is correct. So you will receive, if you're being notified by the IRS, you will receive something in the mail. They're not big callers.
Eric, did you say don't ever do that again? You didn't like my joke? Blasphemy.
She gets an A for effort.
Yes, give me an A for effort. Had anyone ever heard the joke before? I tried to entertain you guys. All right, what time is it? It's 7:05, so we're 5 minutes late. let's get started. So for those of you that don't know me, my name is Renay Butler. I am the Life Over Coach. I'm a speaker, an award-winning business owner, and a certified project manager. I show you how to organize and prioritize your life and teach you how to monetize your business ideas and products. So simply put, I teach you how to get your life and get your money. So happy Sunday, happy date night. Quickly, today's R&Rs. If it's your first time joining, drop your name and where you are from. If you are not following me on my Life Over Coach pages, please follow me on Facebook, Instagram, Twitter, Periscope, and Snapchat. Just as a reminder, starting March 25th, I will only be broadcasting from my Business Life Over Coach page. So make sure you guys give me a like over there so when I start going live, you won't miss me. If you guys like what I do, tell a friend, ask them to give me a follow. And you guys ready for content? Yes? Let me see some yeses. Yes, yes, yes. We're about to get into all of this good tax stuff. Let me see a yes. Those of you on Instagram, Kevin and Raquel. Let me see a yes. All right, so tonight we're going to be talking about all the new tax law changes and how they affect your business and personal life. I have with me today Liz Johnson. She is a certified CPA, and I wanted her to come here today just because tax season is coming up, and I wanted you guys to be armed with as much knowledge as possible, because I know taxes can be daunting, but I think with the proper education, you guys can understand everything that you need to know and hopefully get it done right the first time to keep the IRS from sending you guys letters, okay? So I'm going to turn it over to Liz and let her talk a little bit, and then I'll chime in. So Liz.
Thank you, Renay.
You're welcome.
So when I usually tell people that, when they ask me what I do and I say I'm a tax professional or a CPA, I either get this kind of glazed over look of confusion and boredom, or people start asking me a bunch of questions like, hey, how can I not pay taxes? I got this deduction, the IRS is calling me. So it's kind of, a mix between the two. What I will say is, kind of piggybacking on what Renay was talking about, was that taxes can be overwhelming, they can be intimidating, and just like anything else related to your personal life or your business, the more you know, the more you educate yourself, the less it will seem overwhelming to you. The thought of sitting down and kind of understanding taxes probably seems really boring, but there are lots of great websites out there. If you just Google issues, if you go to the IRS website, there are really great resources that will kind of lay out what's going on, what you need to do for your business or for your personal taxes, and those types of things can be really helpful. So I just wanted to start off with, taxes really impact every aspect of your business and the planning cycle. And that starts from choosing what type of business you set up. So whether it's a sole proprietorship or a partnership, to even thinking about how you're going to procure financing. So tax comes into play into all of that. So it's really important that you be thinking about that when you're either starting your business, as you're conducting your business, and even as you're winding down and getting ready to sell a business. So if you're not aware, there were tax changes that were enacted late in 2017, and there are definitely benefits to both businesses and individuals. And based on individual circumstances, those benefits will vary. So this is a great time, if you have one, to check with your tax accountant. If you have a business and personal income, as well as some type of passive income, so say, for example, investments or rental properties, that kind of adds on to the complexity. So definitely this is a great time to check in with a CPA. So I just kind of wanted to go into some of the highlights of the tax changes. This is not the whole list, but I kind of went through and picked out the things that I thought folks will be interested in. When we get down to talk about some of the individual aspects, there are a lot of changes on the individual side. So just make sure you check in and understand those, because like I said, they did go into effect at the end of 2017, and a lot of you may have even seen them reflected if you're getting paid from an employer in your 2018 taxes and what's being withheld. The flip on that is, if you have employees, this is a good time to make sure you're up to date on those changes too, because that will impact what you're required to withhold from your employees on a federal level and possibly a state level.
So can we start with corporate taxes? I know a lot of my viewers have small businesses and they're really concerned about how these laws are going to affect them.
Sure. So I think the most notable change on the corporate side is a reduction in the overall corporate tax rate. The corporate rates move from kind of a varied maximum of 35% to a flat across the board 21%. So that now means that your corporation, if you have one, regardless of size, has an income tax of 21%. What this does is it really benefits larger corporations. Smaller corporations actually may end up paying more in income taxes as a result of this change. But what this does is it makes the reduction in the tax rate makes the U.S. more competitive from a global scale. We have one of the highest income tax rates in the world. And so when politicians talk about moving jobs overseas, this is one of the reasons, is because we had such a high income tax rate. So what we may likely see is an increase to corporate cash, which could possibly lead to opportunities for smaller businesses because corporations will be looking to purchase more inventory now, add contracting services, and engage suppliers. So for those of you who have small businesses, this may be an opportunity for you to grow that business and hopefully see some opportunities from that lower corporate tax rate.
So guys, if you have questions, type your questions in and I'll grab your questions as we go along. I had a question. You mentioned in terms of contracting services, when it comes to hiring, let's say a W-2 employee versus a 1099 employee, what would you recommend if you had your choice to do that?
That really depends on the type of service. If you want to do an independent contractor, it tends to be a little bit more easier from a logistics employee tax standpoint. So sometimes independent contractors are the way to go. It just depends on the size of your business, the types of services you have coming in. Sometimes you really need that kind of W-2 employee. And again, it's really based on individual circumstances.
Okay.
You have there are different filing requirements for both of those.
Yes. And I know that if it's a 1099 contractor type position, they typically work for themselves. They set their own hours. They kind of tell you the work that they're doing and you approve kind of that performance. Whereas with employees, you give them a schedule, you tell them what time to come in, you're telling them all of the tasks that they're going to perform. So it does make a big difference. I did have a question. Does that affect this new tax rate, your contractors versus your employees?
That depends. So it could have impacts for the 1099 employee on the individual side as they're looking at wages and income. It could also affect on the small business side, but that one really they didn't touch too much. Those types of areas. These were really focused changes. They didn't get into a whole lot of the kind of payroll employee type taxes. What I would say is, from a 1099 employee standpoint, if you have contract work that is not that maybe in and out, so you may have a contract, you may have some open time, a 1099 employee may be the way to go because you can set them up just to work on a per project basis. Whereas if you have a W-2 employee, you're kind of on the hook for keeping them employed throughout, regardless of business cycle.
Okay, let's move in. I don't see any questions rolling through, and I do know that the questions typically are delayed. So if you guys ask a question, I will grab it. Let's move into small businesses.
Yes, so the biggest change for small businesses was really related to pass-through entities. So in the United States, the majority of small businesses are registered as pass-through entities, which means that there's usually 1 to 2 owners. There are little to no employees, and pass-through entities are those structures whose income is based and taxed on the tax return of the owners. So basically, when you pass through, that income is passing through to your personal tax return. So examples of those type of entities are partnerships and sole proprietorships are the largest type of pass-through entities.
And what about S corporations? Also pass through. Okay.
So what happens is this new law allows a 20% deduction of pass-through income. So for example, and this is a very simple example, I warn you, if your business earns $100,000 in profit, you can deduct $20,000 of that profit before the ordinary income tax rates apply. Now, what the other thing you need to take into consideration is if you're filing either married or single or head of household, all those thresholds change. There's a fairly complex calculation in how you get to that kind of deemed business income. So you have to figure out what your business income is, less your expenses, and there are a couple other factors in the calculation, but that's just a general example. So this could definitely benefit small businesses by getting this this deduction of pass-through income. And what this does is this frees up cash again for your business, and this is a great time to reinvest. You know, I think small business owners are always looking for ways to reinvest into their business, and this is a great time for that.
Okay, we have a question. Eric Watson said LLC. I think we touched on that. Eric, were you referring to that as pass-through income when you do your taxes, that it passes through your personal income tax return? If that's your question, just say yes. If not, can you be a little bit more specific? Hey, Mariah, thanks for joining. She said, what about if your company is an LLC or PLLC?
If it's an LLC or PLC, depending on how you've chosen to have that income tax, if you've chosen to have it taxed on the LLC level, this would not impact. But if you've chosen the pass-through, then it does come through and you could get the benefit.
Okay. Any other questions before we move on to individuals?
The one thing I want to say is on this deduction, they can't ever make it easy. So what they're saying is that it has to apply to a professional service that actually generates some type of end product. So professional services for engineers and architecture would be included to get this deduction. But if you are a doctor, a consultant, a lawyer, any type of that, you would not be eligible for this. There are phase-out limitations. Because what they're saying is that's more like for those types, for like lawyers and consultants, it's more of your wages and you're not really developing a product. And this is really for kind of services that are developing some type of end product.
Okay, that makes sense. All right, so I wanted to move on to talk about individuals. I'm looking for your questions, guys, so just go ahead and type it in and I'll make sure we answer all your questions before the end of the session. So how does this affect like you and me?
So on the individual level, and it depends on how much money you make, of course. This is, of course, the Republicans think that this is a windfall. Democrats, not so much. On a personal level, what they've done is taken the individual tax rates and reduced the majority of the rates in the brackets. Really, the people who are benefiting are those that are making $100,000 or more. They are really seeing the reduction in the tax rates. For some of the brackets, folks may actually see a bit of an increase in their taxes. What I will say is that all these tax changes are set to expire in 2025. So depending on, how politics changes, how policy changes, if we have a shift in parties, they may have a shorter life, but for right now, they're set to expire in 2025.
And so for individuals, would you recommend when they fill out their, I can't think of what it's called, when you first get your job and you have to,
your W-2.
W-2.
W-4.
Yes, W-4,
yes.
with your deductions.
Yes.
Would you recommend people change their deductions? Or I know when my very first job, my mom and my accountant said, claim zero plus like an extra $20 per pay period because of the tax bracket.
Yeah.
So what would you?
So usually when your employer provides you with the W-4 information, there's some type of calculator there to help you figure out kind of what you should claim as your exemptions. That changes if you are single or married, if you're a head of household, if you have children, all those exemptions can vary. There are a couple good calculators out there that kind of show the difference between the 2018 prior tax and what's going on in 2018 forward. And so there are definitely some ways you can kind of maximize and change that. I will say that there are lots of changes on the individual level. I tried to go through and list them all, but could not get through them all. Some good ones, they're increasing the standard deduction. So a lot of folks will be eligible for the standard deduction rather than itemized. So that could be a benefit for some folks. There's some increases to child care credits and opportunities there. They left the mortgage interest deduction, but there are some different caps on it. Okay. And mortgages prior to the end of 2017 are grandfathered in. But I believe after December 2017, anything over, I think it's $750,000, there's some caps on the interest deduction. They increased the amount of charitable contributions that can be deducted. So now you can deduct 60%.
Oh,
right.
Good. Yes, that's good.
Of your income rather than 50%
Okay.
for charitable deductions. And those are some of the bigger ones, but there's a lot going on in the individual space. Like I said, employers should have made adjustments starting in January for the new withholding tax rate. But it's a good time to just go back and check since we're early in the year and make sure that you understand what's being withheld. The other thing is, while these are all federal changes, there really have not been announced changes to the different states. So the states use federal income as kind of a starting point. So just be sure to, whatever you're doing, you kind of think about your state taxes as well.
Okay. And then for my small business owners out there, if you have employees that receive
Yes.
W-2s, make sure that you have adjusted their W-2s for those tax changes. So I'm sure whoever your accountant is should have advised you to do that. If they didn't, just make sure you have a conversation with them.
Yeah, and check in with your payroll folks just to make sure you're remitting the right amounts, that your employees understand what's going on. Because, again, it can be very complex. The IRS is one of those things, they just, the more complicated they can make it, the better. So
I used to be a contractor for the IRS, so we did a lot of the modernization and making it easier to collect taxes. But some of all those algorithms. So I will say that I was not the best record keeper in terms of my taxes, and it would always take me forever to get everything to my accountant. And so I disciplined myself years ago to keep everything in a spreadsheet, everything that comes in. So every month I go through and I list everything that I paid out, either for employees, taxes that were withheld, and taxes that I owed and had to pay to the IRS on a quarterly basis. So for those of you that have businesses, you should know that depending on your income, you're either paying taxes monthly, quarterly, yearly. So I had to discipline myself to do that. And so now with my accountant, I really just send her the documents and a spreadsheet. She just, types it all in real fast. And it's really helped keep me organized and make her life a little easier. Because, guys, I don't know if you all know, the more difficult it is for your accountant and your tax preparers to do your taxes, they do charge you more. So if you're that person that shows up with a whole bunch of receipts and they have to sort through that, they're going to charge you more. So literally, I make life so easy for my accountant now.
And the other thing is that your accountant can then focus in on opportunities for you. It's estimated at least 20% of all taxpayers and small businesses miss about $6,000 in deductions.
Wow.
And so if you're not able to tell the complete story either to your accountant or to the IRS, you could be missing out on money and make your life complicated. That's the key. If you have good records in place, if the IRS does come to you for an audit, which one of their favorite things to audit is small businesses, and small corporations. The more you have in place, the less likely you are to have issues. What I would say is, quality records it's just easy to start off that way, especially if you are if you're remitting taxes on behalf of somebody else. So if you have employees that you are collecting taxes from, it just is really it just supports your business and really can help your accountant help you plan and look at what you have. Whether that also be from your business, but also from your personal perspective, and really help you plan through some of those items and help you get, as much money as you can. What I say to everybody is that you should not be getting a refund from the IRS, people. That is an interest-free loan. That is a no-no. We don't do that. So to the extent that you can really, because that's money that you could be using now instead of waiting 18 months until the IRS is giving it back to you with no interest. And so that's the time value of money. $1 today is worth more than $1 tomorrow. So just keep that in mind as you're looking at taxes. If you're getting a big windfall at the end of the year, it really behooves you to do some planning and think about how you can use that money for those 12 months.
We had a quick question over here. Kevin said, has the capital gains rule changed?
Yes. So in some brackets, capital gains have actually gone down. So that's a great question. I think somebody was, I I hate to use the term shelter. That is one area where you can take advantage of the differential tax rates. So if you have more passive income, which is income that comes out of investments, interest, those types of things, that income is taxed at a lower level. So it really benefits you if you can transition maybe some of that business income into some type of passive investment income.
Kevin, did that answer your question? Okay. So what about like home offices and vehicles? How does that?
Yeah, so if you are using any area of your home exclusively for business purposes, it really behooves you to keep good records about that, because you can actually use as a business expense your mortgage interest, your insurance, utilities, repairs for that allocated space of business. But what you have to be able to prove is it is in fact an allocated business space. It can't be like, your kid's romper room and your office.
Right.
It really has to be your office. Understand what that square footage is that you've allocated to that, and then you can divide that square footage by your total square footage and apply that against all your kind of home expenses. You can also, if you're using your car for business purposes, keep a mileage log. If you're going to meet a client, if you are, going, if you're taking a client out, if you're, making runs, to client, keep all that stuff, a log of all that, so that you can, again, use that as a deduction for business purposes. This is one of the areas that IRS really likes to dig into. So if you are claiming that deduction, again, going back to keeping good records, this is just a place where you can be like, yep, I got it. Here you go. Here's my square footage. All the stuff you have to support the deduction is helpful.
Okay. And I think a lot of people know that self-employed people, as well as small businesses, are those that the IRS likes to audit.
Yes.
Do you know why, or?
Primarily because people don't do what they're supposed to do. And again, I think it's daunting. Sometimes the IRS, they're in it they can be a little heavy-handed. And so if you're knowledgeable and understand what you're doing, and your CPA understands what they're doing, you can support your claim. I've won a couple things against the IRS.
Okay.
That's my day job. So it can be done. So just because the IRS sends you a notice, it's not, don't like run and pack up for Wakanda. It's not. It may not be that bad, but that's where that documentation is very important.
Okay. I know. I've never been audited by the IRS. I was audited by the state one time with my business, and that's where I learned so much about the difference between W-2 employees and 1099 employees, and the importance and then the rules of keeping them separate. So.
Yeah, and if you are a self-employed person, make sure that you're remitting, your FICA, your Social Security taxes, all those things, because I think that's where people miss is in those employment taxes, and that's where the IRS starts to dig in on those taxes that you're required to remit if you're self-employed.
Yes.
Yeah.
Okay. And I will say, just from experience, even as a small business, you're paying your tax bill monthly, quarterly. If for some reason you need to get on a payment plan, the IRS is pretty generous about allowing payment plans. I really don't know any small business that's never been on some sort of payment plan with the IRS. All right, we have another question. I have a TSP 401k with my federal job, and I was considering doing another IRA. So my question is, should I go Roth or traditional IRA with the $5,500 max yearly?
That depends on a few things. That's probably, and not knowing your personal situation, it's kind of hard for me to answer that. But I'd lean towards what the Roth probably. Okay. But again, you can do the calculations for the Roth and just make sure you haven't reached your maximum in contribution.
Okay. All right. Very good. So it's 7:29. If anyone has any more questions, chime in. I don't think I missed any. We've lost a bunch of people on here, so it's okay. You guys can go back and watch the replay. But I did want to piggyback off of what Liz said about keeping good records. I built a budgeting for business worksheet, And I've listed probably any and everything in terms of expenses that you could possibly have. If you have employees, how much taxes you need to allocate. I even did the percentage calculators for you guys, so you can put in your percentages by state. You can document every place every penny goes. So you guys can pick that up today. It's on my website at www.bit.ly/TLC Market. That's www.bit.ly/TLC Market. Grab that, and that'll help you guys get started. And it's a yearly budget. So at the end of the year, you can literally save that file, shoot it over to your accountant, and you're good to go. We have another question. Personal info. I'm trying to flip burgers during retirement.
I think you're trying not to flip burgers during retirement.
Oh,
Is that?
I'm trying. Yeah, probably should say not flip burgers during retirement.
So what I would say is to not flipping burgers.
Okay, try not.
Like, I hope you're not trying to. What I would say is that if you have an employer that's offering any type of match, or max that out. That is the first thing that everybody should be doing, is making the most of your 401k matches with your employer. The second part of that is if you have not, and when I mean personal info, again, this is, everybody's situations are different, and there are different thresholds based on your taxable income. But if you haven't maxed out with your employer, definitely look at the Roth, the IRAs, those supplemental types of things. Pay yourself first before you pay, before you are going out and buying shoes. I'm a firm believer in setting yourself up really well for retirement, and understanding the differences. When you talk about a 401k, it reduces your taxable income, so that's another benefit. But then when you get ready to use it in retirement, you're paying taxes at that point. Where the Roth is kind of the opposite, the IRA. So you've already paid taxes on that income, and you're looking to supplement your retirement. If you're at a certain age, there are benefits. If you're past 55, you get some additional benefits. So folks definitely take advantage of those. But absolutely, I'm a firm believer in retirement planning.
Wait, did I miss this question? Oh, who can afford to donate 60% of their income though?
Again, and I will say this, a lot of these tax changes, in my personal opinion, are not really meant for middle income, lower income. It's really benefiting large corporations and folks in larger tax brackets.
Okay, that's awesome. Does anyone have any more questions? We are 7:32. I'll give you guys a quick chance to chime in. If I don't see any in the next few seconds, I'm going to give you guys your Sunday back. And was there anything else that you wanted to share while we wait for questions? Anything else you can think of?
I mean, there's a ton of stuff, and it's, the one thing is, taxes are very individual and prescriptive. So, just be as informed as you possibly can. It's really, while it is daunting on some levels, there is a lot of basic education and tools out there. So I encourage all of you to be as educated as possible, like you would anything else related to your finances. Don't be scared.
Awesome. Thank you so much, Liz. I really appreciate you joining me tonight for this complicated topic. I'm certainly not a whiz at this. I know a little bit, but not enough that I felt like to speak on this subject. So I really appreciate you coming in and teaching our folks what they need to do for this upcoming tax season. Make sure you guys reach out to your accountants.
Definitely.
Again, if you are struggling with budgeting and keeping track of all of your items and income and expenses, check out my Budgeting for Business worksheet. You can get it at www.bit.ly/TLC Market. Thank you guys so much, and I will see you all next Sunday. Have a wonderful week. Bye.